Well, negative sentiment really continued across the Australian market this week. We actually saw 5 consecutive days of losses, closing down 3% for the week, led lower, of course, by the materials sector, down 6.6%, and the energy sector, down 6.2%. And of course, that was in the wake of those copper and oil prices plunging to 6-year lows. The market was also under pressure this week as a result of continuing concerns about weak global growth after the World Bank actually came through and cut its FY15 forecast to 3.6%. Over in the US, we did see shares under pressure as a result of some mixed economic data as well as earnings results that came through. We saw the earnings season over in the US kicking off with Alcoa actually beating on expectations, but some of the banks, so the likes of Bank of America and JP Morgan, missing on expectations. Although it is very early days, we've seen about 35 companies reporting so far, with about 86% actually beating on expectations. If we have a look at Europe, we did actually see some of those European shares boosted, of course, by expectations of further quantitative easing by the ECB, and of course Switzerland overnight cutting its cap on the Swiss franc. If we look at China during the week, we saw better than expected trade data coming through. And of course, the main highlight over here in Australia was that very strong jobs report that came through, where of course we saw that unemployment rate falling from 6.3% to 6.1%. Having a look at the week ahead over here in Australia, on Monday we have new motor vehicle sales through. On Wednesday we have Westpac consumer confidence through, where we are actually expecting to see a boost off the back of those lower petrol prices, and of course that employment outlook, which actually is firming. And then finally on Thursday we have new home sales. Looking across the globe, I think the main focus will be on that ECB meeting, which is out on Thursday, where the expectation is that they will announce an expansion to their quantitative easing program. In the US, we are expecting some housing data through, and of course that US earnings reporting season will be picking up. And then finally in China on Tuesday, we have industrial production through as well as retail sales. And of course that all-important GDP data, where we are expecting that to come through at 7.3% year on year. Finally on Friday we have that flash manufacturing read, which will be another one very closely watched. So certainly will be a very big week ahead in terms of a lot of economic data out across all markets, so there will be a number of drivers for the Australian market, but of course that focus will continue to remain around those commodities and those oil prices.